Welcome everybody. Welcome to Messer Financial's Wednesday webinar workshop. My name is Michael Colon. I'm one of the marketing directors here. Thank you so much for just taking a little bit of time out of your busy work schedule to attend this webinar with us. If you're not familiar, we actually do this every Wednesday with a new carrier just to try and give you some more insight on awesome products, sales techniques, and everything else. Today, we're really excited. We actually have Bob Basulik with National Guardian Life. There's two things, well, he's going to talk about a lot of stuff, but two main points that he wants to talk about is how your clients can buy down to qualify or stay on Medicaid, which is a really big deal because most of the people that I'm looking at that are on this webinar right now are basically in the senior market. The other thing that we're going to focus on is their final expense product that is available to clients up to age 99, which I'm pretty sure they're the only ones that do that. So we're really excited to have Bob with us. Bob, thank you so much. I'm just going to turn it over to you and do your thing, and I'll be throwing out some questions as people ask. Oh, one more thing. If you do have a question, you guys are all on mute. We can't hear you, so don't start talking. There's a little question box in your little panel. You can type it in there and I'll see it, and then I can read it off to Bob and then he can answer it. So feel free to ask questions. Thank you again for your time. Bob, it's all you, my friend.
Thanks, Michael, and good morning, everyone. Thanks for joining us. As Michael said, my name is Bob Basulik. I represent National Guardian Life. We're going to talk to you a little bit today about how you can protect your clients' assets with the AssetGuard product from National Guardian Life. Before we get started on that, just a little bit of background on National Guardian Life, since it's probably not a household name among insurance companies. It's been around for a while, founded in 1909. The home offices are in Madison, Wisconsin, overlooking beautiful Lake Mendota. If you've ever been to Madison, Wisconsin, you know about the lakes there. It's a pretty spot where National Guardian Life is. NGL has two subsidiary companies, Settlers Life in Bristol, Virginia. Settlers focuses primarily on the more traditional final expense life products that are a little more heavily underwritten than what we're going to talk about today. And the other company is Commercial Travelers Life Insurance Company out of Utica, New York. Commercial Travelers' main focus is scholastic health insurance for schools and colleges. National Guardian Life is a solid company for one that doesn't get a lot of notoriety. Over 1.27 million policies in force, assets of over $4 billion, and a surplus of 325 million. Been rated A- by AM Best since 1963. So a good, solid company. Your clients' funds will be secure with NGL. If you'd like more information about NGL, they've got a nice website at www.nglic.com, so you can feel free to visit that and learn more about the company itself. What I'd like to do today is give you, instead of just talking nuts and bolts of the product, I'd like to give you some background about AssetGuard and how it was originated and how it's kind of evolved over the years as we've learned more about the market. To understand how NGL got into the AssetGuard product, NGL had been a traditional old line insurance company for years and years, and in the late 90s decided to reinvent itself and focus on niche marketing. Excuse me, the market they chose was Preneed Life Insurance Company, and really began in earnest to transition to that product in 2001. For those of you not familiar with Preneed Life Insurance, it's essentially defined as a product that's used to fund a prearranged funeral. An individual will go into their funeral home, pick their funeral goods and services, and then purchase a life insurance policy, usually through the funeral director as a life agent, to fund that prearranged funeral contract. And it's it's a big market. It's tough to estimate, but over the years at NGL, we've consistently estimated the market at in excess of $2 billion. And since 2001, NGL has become one of the top preneed providers in the United States, either top one or two. Excuse me. Early on, as NGL learned more about the preneed market, what we found is that consumers really wanted to go to the funeral home to make their arrangements to set aside funds to pay for their funeral. So in response, NGL created the original AssetGuard product for this group of consumers and marketed it through independent agents versus through funeral homes. The nice things about the AssetGuard as this early final expense product was it was easy to explain. There was no medical exam required, very limited underwriting, simple rate structure, one-page application, one health question. So it was very good in that regard. The other really nice thing is it paid benefits very quickly upon the death of the insured, which was a real benefit to family members and survivors of the deceased. As we looked at that product, though, it really wasn't generating a whole lot of interest, and we thought it was NGL missing a bigger opportunity by simply trying to mimic the Preneed products that they had through AssetGuard. So we started doing a little research, and the first place we looked is, okay, what are the motivators? What are the things that drive an individual to go and buy a Preneed policy? And then we started the question is, are the motivators the same then for AssetGuard for somebody who doesn't want to go to the funeral home? Prior to working with NGL, I was with Forethought Life Insurance Company, who was one of the preeminent players in driving the growth of the Preneed market, beginning in about 1985. And back then and for years, we looked at the primary buying motive for consumers as basically peace of mind. Consumers didn't want to be a burden on their loved ones. They wanted to take care of things, their funeral arrangements and paying for it today and not tomorrow with their loved ones and not leaving someone alone to look after their needs. So we started looking at that and saying, is this still what's going on in the 2005s, 2010s, and that time period versus what had been going on back in from 1985 to early 2000s. First thing we looked at is kind of what are the ages of who buys Preneed life insurance, and that we started there because that was information that was readily available to us. So in 2012, we looked at the number of policies issued by the age of insured and put them on a histogram. And what we found from that is that the primary age groups of individuals insured by a Preneed life insurance policy from NGL range basically from 75 to 85. That's where the peak buying ages were. Okay, we took that data then and tried to figure out, okay, what do we know about consumers, about the population ages 75 to 85? So we worked with a demographer named Ken Gronbach, and Ken provided this chart for us that kind of showed this live births in the United States from 1905 to 2005, and how these births are split out by generation. So from 1905 to 1925, you got the GI generation, 25 to 45, the silent generation, 45 to 65 are the baby boomers, 65 to 85 Gen Xers, and then 1985 to 2005, the millennials or Gen Y. We've heard that generation described by a number of different names, and that continues to evolve today. But anyway, this will give you an idea of what we looked at, and I'm going to go on here and give you an idea of why we looked at things this way. So, essentially, what can we learn from the demographic information is that for the past 20 years or so, individuals insured by Preneed policies have been primarily from silent and GI generations. And that's looking back from today for the past 20 or 25 years. Up until 2010, the purchase decisions have been primarily by individuals from the silent generation. And then today, more the boomer generation is making these late life planning decisions, either for themselves or for their aging parents. This gives you an idea of what we're talking about. It's kind of a continuum of how these folks have aged over the years. And when I say these folks, I'm looking at the folks in the 75 to 85-year-old group. So from 1985 to 1995, the 75 to 85-year-old group was primarily from the GI generation. Then 1995 to 2005, we're looking at a split between the GI generation and silence, with the emphasis been on the GI generation. 2005 to 2015, the the GIs were pretty much gone, and it became driven by silent generation. And today, what we're seeing is that the boomer generation is making a lot of the decisions for the silents and for themselves in a decision to buy pre-need type policies. And I say pre-need type policies because I think the type of policies they're looking at is changing. Why is it important? Why is this information of value to you and or to NGL and defining the AssetGuard product? Essentially, each generation has its own set of personality traits that are developed by the environment that they grow up in. If you look at the GI generation, those folks fought to save our country during World War II. They were fiercely independent. They were savers. They were planners. And peace of mind was important to them. They wanted to not be a burden to their families at any time during their lives, and especially not when they passed away. So they were looking for peace of mind and essentially had the wherewithal to achieve it. Remember, these folks in the GI generation came back and took very good jobs and retired with very good pensions and Social Security, and had the wherewithal to achieve that peace of mind. But today things are changing. Today with the we're looking at the silent generation and the boomer generation as the primary buyers for AssetGuard type products or Preneed type products. And if you look at the silents, their personalities were formed by the Great Depression and also by World War II. They lived during these periods, learned to live modestly and save their money, typically civic-minded and independent and deeply religious. And a lot of them, as the market today in a lot of cases is the aging spouses of those men who fought in World War II. And in a lot of cases, they weren't real adept at doing the financial planning and such, because that's something that that frankly men did during that time in our country's history. The boomers, on the other hand, were born during the prosperity following World War II, basically masters of conspicuous consumption. They want instant gratification, motivated by things that will save them time, make their lives easier and add value, less religious and less bound by the norms and traditions that bound the GI and silent generation members. As a result of this, the market's changing. The quest for peace of mind is still a driver, but the purchase has become less driven by emotion and more of a financial decision. The silents are looking to their boomer children to help them with these decisions, and the boomers are driven to try and hang on to the hard-earned savings of their silent generation parents. More and more, we're seeing the purchasers don't want to go to a funeral home and pick up funeral merchandise and services and as required with a traditional pre-need funeral contract. So this is kind of moving the market, that $2 billion annual market, away from pre-need and more to final expense or AssetGuard type product. So what NGL did was kind of redefine AssetGuard and reposition the market to be more attractive for these new generations of buyers. And AssetGuard is now comprised of a portfolio of really similar insurance products offered in conjunction with 2 irrevocable trust options. And I'll talk a little bit more about product specifics here in just a bit. One of the important things is, though, with this is the irrevocable trust options. As a result of this repositioning, the AssetGuard product really works well for your clients who are interested in final expense planning, planning for the eventuality of needing to pay for long-term care health expenses, and are looking at a way to transfer assets, including planning for charitable giving. So if you look at the product in all 3 of these modes, you can see that there are opportunities for both high and low net worth clients. So it's a really nice product and works across the spectrum of clients. If we look purely at final expense planning and how the AssetGuard works there, it's essentially for that client who has the desire to make sure that those costs are covered, the funeral costs are covered, and it actually goes beyond funeral costs. There's money set aside to cover funeral and other final expenses. The policy can be combined with some type of directive as how the policy death benefits are to be used. And it's possible to assign the policy ownership to an irrevocable trust to protect the policy from creditors with possible Medicaid spend down requirements. And one of the nice things is this funeral expense trust is available free of charge from NGL. It's something that's developed, and it's a one-page deal that the consumer assigns the policy ownership directly to the irrevocable trust. One of the biggest opportunities for NGL is in long-term care, long-term healthcare expense planning. It's not a long-term care product, but it's a piece of a planning strategy that folks use in trying to hang on to their assets if they're faced with a long-term care expense situation. Give you some background, it's estimated that 70% of people over age 65 will require some type of long-term care. And if you look at people over age 65, and if you remember the chart that we looked at earlier from Ken Gronbach, you can see how many people there are in that boomer generation that will be turning age 65 or older. In fact, the first of the boomers began turning age 70 in 2015. And they're turning age 70 at about a rate of 10,000 persons per day, and that's going to continue for probably the next 20 years. With the folks that do require some type of long-term care, it's likely that they'll need to care for longer periods of time because folks are living longer. Life expectancies of the folks that age to this age group are longer than they had been in years. Long-term care is expensive. The national average cost of a semi-private room is over $7,000 per month. And if you're paying for that on your own and have $150,000 in assets, you'd use that up in less than 2 years. And these assets are hard-earned assets that people want to hang on to. They don't want to spend them for paying for nursing home care or other types of care. Excuse me. When you look at how long-term care health expenses are paid, it turns out that Medicaid is the primary payer for long-term services and supports. The total LTSS spending is this chart says is $310 billion. Medicaid pays 51% of that. So it's a big chunk of these care expenses are paid by Medicaid. So it's important that we understand a little bit about Medicaid. I may be preaching to the choir here, but I'm going to kind of go through quickly what Medicaid is and how it works. And this is important because there's a big fit for AssetGuard in this whole thing. So if this is already knowledgeable information for you, kind of bear with me for a minute. But anyway, Medicaid came out of the Social Security Act of 1965 and provide health insurance coverage for those with limited means. That's kind of gone beyond those with limited means when you do the Medicaid planning, and really fits basically all asset classes. Whoops, I'm sorry, I hit the wrong button there. Oh, here we go. So to qualify for Medicaid, there are some non-financial eligibility requirements. This U.S. citizen or qualified alien age 65 or older and in need of care in a Medicaid-approved facility. There are fairly complex financial requirements for Medicaid eligibility. I'm just going to kind of touch on some of the main ones. For someone who really is looking at Medicaid, we recommend that they work with an elder law attorney or someone who's qualified to do this type of planning for them. There are limits placed on allowable amounts of income. The limits vary for couples and individuals. The individual must spend on resources to the established limits, and the amount of individual resource allowance varies by state. Countable versus non-countable resources. Most resources are really considered as countable and include checking and savings accounts, CDs or money market accounts, stock bonds, mutual funds, IRA accounts, anything that can be turned into cash, basically, easily turned into cash is basically a countable asset. Other resources are considered non-countable and exempt. The big ones here, you've got your residence, your automobile, personal effects and household items, life insurance within limits, burial-based items, and the irrevocable funeral expense trust. And I've highlighted those two because that's where AssetGuard fits. Excuse me. Just to give you an example of what the limits on non-countable assets may be. I looked at Wisconsin, and an individual can have a life insurance policy with a face amount not to exceed $1,500, which isn't much, but there might be an opportunity there. And they can also have an irrevocable funeral expense trust with a face amount not to exceed $15,000. So that's where your big opportunity is. We're at with AssetGuard for folks who are in a Medicaid spend down planning situation. NGL can provide assistance with understanding the limits specific to your state. You can reach out to the local caseworker. You can research online, but you can get those limits for your state fairly easily, so that when you're talking to a client, you can help them with this planning process. Some state-specific Medicaid limits that NGL publishes. I'm just going to pop through these, and if you see your state, you'll have an idea what the limits are there. So most states there are no limit, but this handful does have limits. Now there are 2 states where the NGL irrevocable Preneed funeral trust is, or I'm sorry, irrevocable funeral trust is not available, and that's Texas and Florida. The trust is a little different in Indiana. It's called the NGL Final Expense Trust in Indiana, and the limit there is $10,000. But you can still do a $10,000 AssetGuard policy and have it in trust and exempt from spend down requirements. Excuse me. Essentially, when you're looking at somebody in the mode for doing Medicaid planning, there are kind of 2 scenarios. The first one is your clients and doing crisis planning. They're facing a current immediate need for skilled nursing care, and they're applying for Medicaid today. The second is more of contingency planning. The client does not have an immediate need, but sees that they're in a situation that they may need to be in need of home care or assisted living, or may need additional skilled nursing home care in the future. So, but in both cases, AssetGuard works really well. With the crisis planning, you can write a single premium AssetGuard policy up to the maximum amount allowable state and immediately assign ownership to the NGL Funeral Expense Trust. Since the policy is then owned by the irrevocable funeral trust, is exempt from spend down requirements in your state, and allows an individual to move up to the maximum allowable in Wisconsin, just short of $15,000 into a policy put in the irrevocable trust, and that $15,000 is sheltered from Medicaid. For the folks that are more in a contingency planning situation, you can write the AssetGuard policy today up to the maximum amount allowable and name a beneficiary in the policy, not assign it to the trust, just let it sit there as a standalone life policy. Then when your client needs to qualify for Medicaid, you can assign the policy to the trust, and it will then qualify as an exempt asset. So this is kind of neat for those folks who may or may not need it. It gets it set up so that if they do find themselves in a situation where they need to apply for Medicaid, they can then qualify this as an exempt asset. A couple of items to note on the funeral expense trust is the monies that are placed in that policy and held in that trust must be used to pay for funeral expenses. If they're not used to pay for funeral expenses, then they may be subject to recovery under your state's estate recovery program. Not all states have an estate recovery program, so you need to check with your state to find out what their stance is on that. So the beneficiary of the trust then is the funeral home as their interest may appear, or the estate of the individual. So the funds, any excess funds are paid to an estate. Something else that you might note is we talked about the allowable limitation on life insurance. So you can also write a separate AssetGuard policy up to the allowable amount under the life insurance exemption for your state. Wisconsin, it's not big, it's $1,500. That would just be a policy that was set up to be paid to a beneficiary upon death. But there are other states that have much higher limits. I'm in North Carolina right now, and in North Carolina, there's a $10,000 life insurance exemption. So it's possible in North Carolina to write a separate AssetGuard policy with a face amount of $10,000, and that policy would be exempt from spend down requirements. The good thing about that is someone can move whatever the premium is on their $10,000 policy into the insurance policy, and it's not subject to spend down requirements. So they have basically sheltered almost $10,000 of additional assets in North Carolina. We see this as a huge opportunity as the boomers age and are faced with these types of care expenses, not just for themselves, but for other family members, especially their parents. I'm sorry, excuse me. With AssetGuard as an asset transfer vehicle, the beauty of that is that your client can transfer assets to family members, acquaintances, or charities outside of probate and free of federal income tax. So if it's in an insurance policy, naming a beneficiary, that beneficiary can get those funds. They don't have to pay federal income tax on them. It doesn't have to go through probate, so it's funds that are available immediately upon the death of the client. The policy can be funded in a single lump sum payment, or payments may be paid over time. We have AssetGuard offers plans 3, 5, 7, and 10-year payment plans. Can be paid monthly, semi-annually, annually, whatever works best for your client. The policy can name a beneficiary, or you can assign policy ownership to NGL's estate planning trust. Again, this trust is free of cost from NGL. The beneficiaries are named in the trust, and it has the same effect. The benefit of using the trust is it protects those assets from creditors down the road. And with the NGL AssetGuard product, you can transfer up to $100,000 with a single premium policy. So it's for the higher net worth clients, this might be something to look at as a way to earmark assets for transfer and to facilitate the transfer to, again, a charity or a family member. The NGL Estate Planning Trust does work with Medicaid. If the policies are assigned to the trust, they are subject to a 5-year look back when determining Medicaid eligibility. The clock starts on the look back period on the date the policy is irrevocably assigned to trust. So if you did it today, 5 years from today, that policy in trust would not be considered as an asset, or would be considered an exempt asset for Medicaid spend down purposes. One thing, and I've underlined it here, is once it's in the trust, that arrangement's irrevocable and cannot be unwound. Essentially, it's a legal trust document. NGL can't refund the policy benefits. They can't do a cash surrender on the policy. Only with a court order can that trust be unwound. So it needs careful consideration when you set it up, and probably advice of a financial planner or an elder law planner in setting these up if it's going to go into the NGL Estate Planning Trust. If you do set up the NGL Estate Planning Trust and it isn't in effect for 5 years and your client needs to qualify for Medicaid, the value of the policy basically creates a penalty period during which the client will not be eligible to receive Medicaid benefits. But again, if you talk to a elder law attorney or some planner that works with these all the time, that might not be all of a bad thing, because there are ways to develop plans to where you have a cash pool and a policy pool, and a policy, so that the penalty period is covered based on the established criteria of the state. Some other potential uses for AssetGuard: if you have clients who are veterans or spouses of veterans, AssetGuard may be used as part of a planning strategy to help a client qualify for Veterans Aid and Attendance Programs benefits. I'm going to talk a little bit more about Veterans Aid and Attendance here shortly. And the other thing is AssetGuard may be used in planning for clients with other potential Medicaid strategies. And that goes back to the last statement I made on the previous slide, where you can use the AssetGuard policy as part of a planning strategy to pay the, so you can shelter assets and still cover the penalty period for Medicaid qualification. All right, Now the fun part of this is the part that I enjoyed, because it's a little bit of a case study that I put together here, based on an individual that I know very, very closely. This is my mom. Mom had a stroke several years ago, and it was pretty serious, and we weren't sure she was going to recover, but she did well. She went into a rehab center, and within 30 to 60 days, I guess, she had recovered most of her facilities and was able to go back and live at home with some home care. But we weren't sure how to pay for the home care. So my brother and I started searching around for what options were available. We were directed by the caseworker she was working with to do a funeral expense plan. So that was one thing that we considered. We weren't sure what else was available, though. At that time, I was working on some product development efforts where we were looking at a Medicaid annuity. And one of the attorneys I was working with suggested that we look at a couple of things. And one of the questions he asked was mom a veteran, or was dad a veteran? My dad's deceased, but he was indeed a veteran. He served in World War II. And what we learned is that there was a veterans benefit called Veterans Aid and Attendance that's available to the veteran, a surviving spouse of a veteran, and it provides a monthly benefit for those folks who are in need of home care assistance or assisted living. It doesn't pay for nursing home care. It kind of switches over where you look at Medicaid at the point where you need the nursing home care. But this was a nice benefit. It's up to almost $1,200 a month to go toward the cost of care. Eligibility requirements, again, available to veterans. So they're survivors. The veteran must have at least 90 days of active duty, including at least 1 day during a wartime period. So we checked that box off as dad having qualified. The surviving spouse must have been married to the veteran at the time of his or her passing. So when they were indeed married when dad passed away. So check that box. Must require the assistance of another person to perform some of the daily activities of living. That was certified by her doctor that she needed assistance with bathing, dressing, meal preparation, most of the daily activities of living. And then there are some financial criteria that I'm going to talk a little bit about next, and must be 65 or older or totally disabled. My mother, I think, was 90 when she had the stroke. She's 95 today. So we checked that box off. The available benefit amount is limited based on the applicant's income adjusted by the cost of care. Well, mom's income was pretty limited. She was getting a small pension from my dad's employment and a small Social Security check every month, probably totaling about $1,600. The cost of care in her case was in excess of $3,000. So yeah, she was well under the amount needed for the cost of care. There's no set asset limit, but the asset ceiling is generally cited to be $80,000, and that doesn't include things like residence and vehicles and hard to sell property. Mom had a fairly decent inheritance, so she was slightly over that amount. Well, she was over that amount, so we needed to do something with that. One of the critical things or key things with the VA aid and attendance is there's no look back on gifts. So it's unlike Medicaid where there's a 5-year look back. You can actually gift money and have it not counted as an asset under the asset limits for VA aid and attendance. So here's what we did. Mom had a life insurance policy that was paid up and had been paid up for years and was pretty much not gaining any value. So we did a Section 1035 exchange of that paid up policy, put the value into an AssetGuard policy, and then assigned the policy to NGL's Funeral Expense Trust. So that lowered her asset base by doing that. Mom wanted to, we kind of worked with mom and look at what was in her will to kind of see what her wishes and desires were for transferring assets. So we purchased a second AssetGuard policy, and assigned it to NGL's estate planning trust with the great-grandchildren as beneficiaries. So we set that up so that the amounts that she wanted to leave to her great-grandchildren were covered by the AssetGuard policy and assigned to NGL's estate planning trust. She also wanted to leave funds to her grandchildren, so we then created a bank account, or an account through a bank, jointly for each of the grandchildren. And then we took the balance that was still over the limit and put it in an account that was set up for the children, in this case, my brother and me. And essentially, that is our emergency account, or the account that we would use if she needs to qualify for Medicaid to go into a nursing home. So we would use that to cover the penalty period when she couldn't qualify for Medicaid because her assets were too high. So we think we've got a pretty good plan set up. This is some contingency planning. The AssetGuard policy that's in the funeral expense trust is, we know that it's safely set aside for the funeral expenses, but we feel pretty comfortable about what we did, and this works well. I mean, Mom's assets were pretty modest. We hung on to the house. She has no need for a car, so we sold the car, which was not worth a whole lot at that point anyway. But for the most part, we were able to hang on to all her assets and are pretty much covering her cost of care through her current income and the amount that we get from Veterans Aid and attendance. So we feel pretty good about what we did there. Let's talk a little bit about the product. I said I wasn't going to get into a lot of nuts and bolts, but I think it's important that you know kind of some of the product specifics as you go out and start marketing this to your client base. Essentially, there's a minimum face amount for AssetGuard on single pay of $500, and for the payment plans, 3, 5, 7, and 10-year pay plans, $2,500. There's a maximum face amount on the single pay plan of $100,000. Now, again, the maximum, if you're going to do this for the irrevocable funeral expense trust, the maximums vary by state. If you're just issuing a policy into the estate planning trust or as a standalone beneficiary policy, the single pay plan can go up to $100,000. The 3, 5, and 7 pay 3, 5, 7, and 10 pay plans, the maximum is $35,000. Eligible ages, and this is important, on the single pay, you can go up to 99 for the single pay product. So if you have a client like my mom who's 95, she would qualify. 3-year pay plan, 0 to 90, 5-year pay plan, 0 to 85, and the 7 to 10-year pay plan, 0 to 80. We don't see a lot of the pay plans being sold because to be honest, most of what's being done is someone setting aside a lump sum either to cover their final expenses or in a irrevocable funeral expense trust. And with the irrevocable funeral expense trust, the more you can put into that, the more assets you can shelter from spend down requirements. Excuse me. There's only there's one health question on the application. Basically, everyone qualifies as long as they meet the age eligibility. If you answer no to that health question, it's a standard issue product. With the standard issue product, the premiums are slightly lower, the commissions are slightly higher. If they answer yes to if the insured answers yes to the health question or does not answer the health question, then a guaranteed issue policy is issued. There are some differences on the 3, 5, 7, and 10-year plans as to what the death benefits are if it's guaranteed issue. This policy is kind of neat, and it's got an annual. Well, actually, it's got a simple annual growth rate that's added daily. Easy for me to say, but essentially it grows at 1.75% annually. But the interest rate is calculated daily, so you don't have to live the full year to get the interest. Whatever, it's prorated based on how long during the year that someone has lived. So 1.75% annually calculated daily. The death benefit on all single pay and standard issues, immediate full death benefit. I haven't talked this long in a long time, so my tongue started to get tied. My apologies. With the guaranteed issue, non-single pay, again, that's the 3, 5, 7, and 10 pay plans. In year one, the death benefit is limited to return of premium plus 3%. So, you can't earn that much putting money in a savings account today. So that's not a bad deal. Year two, the death benefit is 70% of the original face. In year three, it's 100% of the whatever the death benefit is calculated to be. I mentioned the health question, so I thought I'd show it. The application is pretty simple. It's essentially one page. The top part is filling in the personal information. The middle part is calculating how much insurance they get and what the premium rate is. There's a statement of health, which is essentially just one long health question or health statement. It's pretty self-explanatory and easy to go through. If in doubt, you don't answer it or answer yes to the question. Any underwriting is done at claim time, so it's there may be a rescission if it looks like someone misstated on the health question, just like with any other insurance. Then the last part of the application is primarily signatures. If you'd like, I can send you copies of the application. My email address is on the last page of this presentation, so that's there for you if you have any questions following this, or if you'd like to see some sample copies of some of the information before you decide to sign on with us and offer AssetGuard. Okay, marketing, and this is I said that I'm kind of supporting NGL and their marketing of this program. The biggest opportunity for you guys is with current clients, and we've got a couple of pieces we developed that kind of did you know pieces of how this product can be used with Medicaid. The big thing I think is to get the word out that you offer this type of a product, and it can be to all your client ages. You don't want to just focus in on the 75 to 85-year-olds who are looking at it primarily maybe for themselves. But you want to also make this information available to folks in the younger age brackets who may be in a position where they're working with their parents to help them plan for their needs. So it's a good way to not only serve your current clients, but broaden your client base. And it creates another decent income opportunity for you with your current clients. So if you're in need or have any questions about any of these types of materials that we have available, let me know. NGL's got a great website, great agent website. So once you contract with NGL, you get on the website, there's just a ton of stuff available for you, a ton of information, a ton of marketing materials. All of the resources, applications, and such are out there. There's an electronic rate calculator that's available online that you can use. It's just a nice website. The forms are available to either be shipped to you in paper format or in fillable PDFs. Most of what I'm writing myself, I write as on the electronic PDFs. I just fill them in and send them in. I don't write much myself, so there are. Let's see. One of the things that we've seen that our most successful AssetGuard agents do is they partner with local social services caseworkers, so they get to know who the caseworkers are, so that when the caseworker says, go down to your funeral home, instead of saying, go down to your funeral home and set up an irrevocable funeral expense trust or a Preneed contract, they'll say, go see Joe, he can help you with an irrevocable funeral expense contract through a insurance policy. They'll send them to you instead of the funeral home. Elder law attorneys are a great source. We're working with some of those folks here in North Carolina, and many of the elder law attorneys are not also life insurance agents, so they're looking for someone to put this business with. So it essentially becomes, you're like the pharmacist and you're filling the prescription that's written by the elder law attorney for the products that they need for their clients. Estate planning professionals get into this as well. And one of the things we're seeing is special needs trust administrators. In most special needs trusts, it's okay to have an irrevocable funeral expense trust as well. So those folks are looking for a place to put that business. So if you know of anybody in your area who's involved with special needs trusts, that might be a good place to go. One of the things to remember is it really doesn't make a lot of sense to put somebody who's an imminent death situation in an NGL AssetGuard policy, because it can be done, and the policies are accepted, but essentially what happens is you end up spending a bunch of time and not making any money, because there are commission chargebacks during the first 12 months if the individual passes away during that time period. So you might want to keep that in mind as you're talking to your clients. It just really doesn't make sense to go that route. So excuse me again. Okay, so let's talk about NGL AssetGuard and how it works for your clients. Essentially, it can be an integral part of their estate and long-term care contingency planning. Everyone age 0 to 99 qualifies. NGL issues policies within 2 business days of receipt of a clean application in Madison. So the policies are turned around very quickly, and commissions are paid very quickly as well. You can immediately assign the policy to an irrevocable trust, or assignment can be done at a later date. You've got the 1035 exchange option available. In many cases, someone will have an insurance policy that's got a cash surrender value that's higher than the allowable amount, the allowable asset amount, or it may also have a face amount that's higher than the allowable amount. So it's possible to do a 1035 exchange, either full or partial on that, and put those funds into an AssetGuard policy. NGL has toll-free policy administration support, so if you have any questions, you can call for help on policies. There's also a toll-free customer or agent support line that you can call. So NGL does a very good job of that. They pride themselves in service, and they try to live up to that pride. One of the biggest things is quick claim payment when your clients need it most. The claims are also paid within 2 business days, as long as they're a clean claim and there's no instance that you need to look, that our claims department needs to look back for possible misstatements on the application. So the claims are paid very quickly, and that's extremely important, because your clients are in a situation then when they're reeling emotionally and don't want to have to worry about how they're going to pay for funeral expenses. How about AssetGuard for you? Quick and easy contracting. There's a spot on the Messer website for contracting. The irrevocable trusts are free for your use. We've got product training and support available online, and a lot of it is very good. I'm here to help you as needed, but most of your help can come by calling the 800 agent support line at NGL and looking online. As I mentioned earlier, the commissions are paid promptly, and I think they're very competitive for this type of product. We got marketing support available online. Again, I'm available to help to the extent that I can. The applications are simple and easy to use. The rate calculator is available online, and the 1035 exchange option, which we mentioned earlier. So that pretty much wraps up what I wanted to talk to you all about today. Again, thank you for joining. I hope I didn't bore you too much. I hope the information was at least somewhat informative and of value to you. My email address is listed there. That's probably the best way to reach me. You can also try and get me on my cell phone at the number listed. So that's all I have. I turn it back over to you, Michael.
Yeah, great. Thank you so much, Bob. We really, really appreciate that. I think that's pretty awesome. We love having stuff like this. So we just want to thank you for, again, just sharing all this information. There's a couple of questions about just the content, because there was a lot of it. Everybody, we actually post our webinars on our website underneath our on-demand library feature. It will be available next Tuesday. So you can actually go through this thing and you can watch it. You can take more notes. Everything will be right there available for you. So If there's any other questions, I'm going to give it another 10, 25 seconds to see if anybody else has any more that we can answer. I don't see any coming in, but and just to remind you guys, again, we do this every Wednesday. We have our Wednesday webinar workshop. We're going to put it on hold once we start gearing up for the open enrollment in July timeframe, just so we can help people get ready to sell, and then we'll pick it back up a little bit later in the year. And then couple house cleaning. If you're looking for some E&O, you can go onto our website. We launched a new program in the middle of last year. The price starts at $355 a year. It's some of the lowest priced E&O on the market. So you can go in, you can call us, ask for some pricing structure, see if we can save you a little bit of money. So Bob, if you don't have anything else, I'm just going to go ahead and shut this down. But we want to thank everybody for taking some time with us, and we'll be in touch soon. Appreciate you guys.
Yeah, thanks everyone.